Good morning all and welcome to today's video. So I have two pairs on watch today and those are pound dollar and euro dollar. So I'm going to break them down for you now, give you my thought process as always and tell you what I will be looking for in terms of entries from these pairs. So we start with the higher time frames. We do top-down analysis, not bottom-up analysis or bottom-bottom analysis, which is what a lot of traders do. So why am I looking at these pairs? I'm looking at these pairs because in pound dollars case, we have this 1, 2, 3 touch structure. This structure here, just going to draw this on crudely. I didn't put these put trend lines on because I'm just trying to keep the charts to a minimum where clutter is concerned. Lots of people have lots of clutter on their chart and no wonder they're not profitable because they can't make head nor tail of what the market is actually telling them. Whereas if you keep your charts to a minimum, then you can see structures such as this. So we have the 1, 2, 3 touch structure with a 1, 2, 3 middle section where the lengths are of a similar proportions. So if we just measured this, you can see that this leg is longer. But one of the reasons that this leg is longer, we just measure the middle section. The middle section tends to be of a similar length. That's of a similar length, slightly shorter, but often we see, I've talked about this often, we often see people caught the wrong side of the market when we get to these kind of all-time or these significant lows. You can see this low here was an all-time low in terms of the data which we've actually got available. And one of the things that people do is one of the reasons this happens, so we see it break below a 3-touch structure to the downside and completely smash below and then break back in. And one of the reasons that happens is because the media, all kinds of media outlets get hold of this, that pound dollar is at an all-time low, and people just think it's going to keep going. People that are trying to make money or maybe have been thinking about trading and thinking, how can I get involved? They hear the media saying this is at an all-time low, and so-called experts, of which I heard one saying, they just think it's going to keep going. And then people think, oh, well, I'm just going to sell it then. I'm going to get involved. I'm going to sell it. I don't really know where I'm going to sell it, but I'm just going to sell it. And then they may have some limited knowledge of support and resistance, not realizing that they're actually selling into a low, which is what they do most of the time, or buying into a high. So they get short, they get completely caught the wrong side of the market, and then price pushes up. That's what we see the majority of the time, particularly or mostly on the higher time frames. So we get that here, we get that 1, 2, 3 touch structure with the 1, 2, 3 middle section. It breaks below, catches people the wrong side of the market, and then we have that kind of very clear impulse correction continuation which pushes higher. Okay, so at this moment in time, there's no need for us to come back down to these lows here because we've already caught people the wrong side of the market by way of a completed piece of structure and pushed up. And we've had confirmation of the move, or as much as we could wish to see, by way of an impulse correction continuation to potentially take out this near miss, which failed to tap into this high. I've talked about often how the near misses, such as this one, often get filled. So because we have a near miss here versus if we'd actually tapped into that area, that makes it more likely that we will take out this high before forming anything deeper or anything more complex. Okay, on the lower time frames, you can see we have that 1, 2, 3 touch structure there with, if we were to drill down, you would see a clearly identifiable middle section. So that gives me a clue when we push down for the 3rd touch here that this is a completed structure, and of course we push up from there. Okay, however, note that we have been fallen to the downside. Okay, and notice that there is, so we've no need necessarily to come all the way back down to this low here because this is a completed piece of structure, this 1, 2, 3. Okay, but what we do have is this little footprint. Price action left us with a little bit of a footprint. You see the sharp move down followed by a sharp move up, and what happens? We near miss to that area. We don't quite tap into it, and then we have a near miss to the near miss. When we see a series of near misses like this, that also increases the likelihood that we're going to push to the downside to take out each low that price near missed to. Okay, and then potentially we could be seeing moves to the upside from there, okay, for that longer term, higher time frame direction to play out that I was just talking about, that I've just broken down for you a minute ago. Okay, so we have, how do we know, or how can we have a strong inclination that we're pushing down to take these near misses out? Well, we moved up in a very non-progressive way. If you just look at this move here, this is non-progressive price action. This is not a series of tight flags like that into sort of slightly larger tight flags. This is just one sideways piece of price action for a month. This has been moving sideways pretty much for a month, not progressing to the upside in any convincing way, shape, or form, giving me a clue that we will take out this near miss to here and this near miss to here before price does anything else. What are the other clues? Okay, well, you can see now that we have this very bearish daily close at an area of liquidity, an exchange of liquidity. We tap into that area, and typically speaking, these candles are indicative. These candles here, these very bearish closes with a big wick above them specifically, are very indicative more often than not of a aggressive move to the downside. And you can see we're getting some momentum coming in now. What are the other clues? The other clues are we have a sharp move up followed by a sharp move up, sharp move down, which we tapped into yesterday. Often the sharpness indicates how much liquidity is there, and it also indicates how aggressive the subsequent sell-off last time around often indicates how aggressively we will sell off next time around. And you can see we're getting some aggressive momentum there. What are the other clues? The other clues are, if we just measure the impulses. So within a correction, there's an impulse correction continuation. So we have this impulse correction continuation. And when we see that, usually the legs are of a similar length. However, if we just measure this and we take it from here, if we take it from here, you can see we have this impulse correction continuation, and they are of a similar length. However, one of the reasons we likely pushed a bit higher is because we have the sharp hook point there, and because we have this middle section. So we have this 1, 2, 3 middle section, okay? Now, often we break out by a similar amount as the middle section is high, okay? And what I mean by that is if we just put, I've got a bit more time today to do this, so I'm just going to spend a little bit more time doing this for you. So if we assume that this is the depth of the middle section, and we just measure the middle section, so from the base to where price broke it, and then we assume that the breakout is of a similar length, what do you know? That takes us pretty much up to the area of value that we rejected from. So it's no surprise to me. I was talking previously about how I wasn't anticipating price to reject from here because of the volume that's been built up in this middle section. And as you can see, when we measured it, I thought that would likely take us up to here, specifically because of the volume built up within that middle section. Okay, so we did that. That's exactly what happened. And now you can see that we've had some consolidation here. I actually prefer, yesterday, if you remember rightly, I was forecasting a push down followed by a flag, and I said that we would likely get one that mimicked what happened to the left, to excuse the drawing, because often price will consolidate in a way that is kind of symmetrical to what happened to the left. So if we get a push down, we'll often get a little correction next to, if there was a little correction to the left, if that makes sense. We did get a little correction here, but not one that I was able to capitalize on. That is not a structure that my rules allow me to get involved with. But I actually quite like the fact that we've now consolidated below this low. And the reason being is because of the momentum, because of this momentum here, there was always a chance that this could have been some kind of bull flag to push higher like that, okay? So because we're trading below this low now, we've kind of negated the possibility of this being some kind of bull flag to push higher. So with that in mind, what I'll be looking for today is the following. If we consolidate here, it wouldn't surprise me if we get something like this. Okay, this may not be ready by the end of the day, but this is what I'll be looking for. If we consolidate sideways and there's a way for me to get involved, I can see some structure. I can see where the banks most likely and the big players are stacking their orders, then I would look to get short. We would have that impulse correction, potential continuation, and I would look to get short either on the break of the flag or within it, and then I would be able to manage this down to these lows before price did anything more complex for something in the region of 8%. And one thing I like about this as well is that, see this aggressive move up here, if we are going to sell off, we usually sell off with the same level of aggression as price came up. Okay, I talk about how we often get corrections to the right which are proportionate to the ones to the left. Well, often when we sell off, we also, where impulses are concerned, we often mimic that as well. If you've ever listened to or read Trading in the Zone, Mark Douglas talks about the symmetry of the market, and that is exactly what he's talking about. If this just sells off, which it could do without forming a correction, which I can get involved in, then I would just leave this alone. So I've got I've got an alert set there just to see if we can push up to the start of this correction and give me that tight flag. And I've got another alert below this to see if we push down any further and form a separate correction that I may be able to get involved in. But we shall see. So that's what I'm looking for from pound dollar. So moving on to, of course, if none of these alerts trigger, this one here or this one here, then I won't look to place a trade. Nice and simple. Right, so with euro dollar, it's a slightly different picture. If we just zoom out to the higher time frames, we don't have kind of like a standout liquidity point, and that's probably why, you don't see people getting caught massively the wrong side of the market, because it's not a standout as with pound dollar. You can see this is a standout low. This is just an exchange of liquidity. And I often talk about these areas of liquidity being train stations. The more standout they are, they're more like the major train stations where more people get on or off, versus these little minor ones, which are more like the minor train stations where less people get on or off, which perhaps explains why price didn't spend too long at this area before it rallied to the upside, versus pound dollar, which you can see from the candles spent a little bit longer there. Okay, so that's an analogy I like to use. But what we have here is we have this 1, 2, 3 touch structure once again. Okay, and then we have that middle section. We have that 1, 2, 3, where the impulses are of a similar length, implying that that is a completed piece of structure and that we will likely rally to the upside from there, which is what we did. You can see we then have that impulse correction potential continuation, but notice that we moved up in the form of a reversal structure. So we have this ascending structure here, which tapped into this exchange of liquidity here by way of a 1, 2, 3, where the impulses were of a similar length. And if we just drill down, you can see that we had, to some degree, it wasn't that clear, we had this impulse correction continuation middle section, and we even had a 1, 2, 3 last leg where the impulses were of a similar length, giving me a clue that we would push to the downside. We would likely break above that high and then push to the downside, and that's exactly what happened. Now in this instance, notice that we have already tagged the low, so we near missed to this low, and then price came down and tapped into it. So the chances of this playing out to the downside, chances of a trade on this one are slightly lower because we've already tapped into the low. We do have one there, but that's a bit more negligible. I'm more paying attention to these sharp ones here, these more standout ones. But notice once again, just as with pound dollar, we have moved up in a non-progressive way, not by a series of tight corrections and moves up. We've just moved sideways in a very non-progressive, corrective way for about a month, just over a month again. And notice that we have broke above this high here, and I shall tell you why I won't be looking for a correction down here today, but rather a break above here. Okay, so if I just drill down, so just looking for a move potentially back down to here for a kind of double bottom before that longer term move to the upside occurs, because on the higher time frames on the weekly chart, we've done enough to move to the upside because we have that 1, 2, 3 completed structure. Okay, and this kind of ties in with what the DXY, the dollar index, is doing as well. Okay, so on this one, if we just measure this structure here, we have kind of fulfilled that. And if we just measure the middle section, We have quite a deep middle section on this one relative to what's happening at the moment. So if we just measure this from the break to the base of the middle section there, we have this impulse correction continuation, giving me a clue that that's a completed middle section. But if we measure that out, notice that takes us up to here and potentially up to this area, and we've not actually tapped into that area yet. Okay, so we've near missed that area. So any trades here are less likely to play out because we could be, if I just move this a second, I've removed the wrong thing there, but just stick that back on the chart. Okay, so any trades, if we get a correction here, it's less likely to play out because we near missed to that area and because of the volume that was built up in that middle section, which could cause price to push higher. Of course, we are getting some momentum coming in now, but one of the things we do, those of us who trade the Falcon strategy, is we look at the nature of the market. Okay, so look at this move down here. I'm just going to cross-reference this. Although this could sell off, look at this move down here, and if we just use the bars pattern tool to replicate that move, look at that move, and then look at pound dollars move. Okay, so we use the bars pattern tool to replicate this move. I would argue, so compare that to that, I would argue that this is a corrective move down, okay, and this is a much more impulsive move down. So that also ties in with the fact that if euro dollar is moving down correctively, then it's more likely to, whoops, what's happened here? It's more likely to push up and break that high, and then move to the downside. Especially if I just look at this, notice this. This is another thing. I've literally just spotted this. We have a sharp hook point there. We have a sharp move down followed by a sharp move up, which could act, okay, as the base. I literally just spotted this. This could act as the base, for something like that, maybe a reversal structure for that move to the downside. It could act as something like this, or it could even act as, so we get a middle section like that. We push down, break that low, and then move to the upside, and then this becomes a bull flag, which also is possible because of where the DXY is positioned. So any corrections here will be much less probable, particularly as we can see that we have this move down, sharp move up. When we see these sharp moves up, if we're going to push to the downside, often these sharp moves up are indicative of liquidity, which is being placed at an area of value above. Well, which area above would that be? Well, probably that area there, which I was talking about. So if we don't push up to these highs today, which it's looking less likely that we will as we get that momentum coming in, then I would not be looking to place on this trade. So this is probably a bit less probable than it was when I put it on watch last night for an entry. Whoops, what's happened there? Euro dollar has removed itself from my, there we go. Thank you. So that is what I'll be looking for today, folks. Of course, pound dollar looks the most likely to shape up with an entry. I've got an alert set on euro dollar to see if we can break that high, but there's no news announcements coming out today which may cause the volatility to suddenly come in. But you can never say never in trading. Anything can happen. We may get that momentum come in. We may break above this high, push down and flag. And that is why as traders, we have to be on the ball. We can look at these and think, nah, that's not going to be ready today. And then all of a sudden, within one candle, we're back up here. And then you've gone off and done something else because you thought your entry wasn't going to shape up. And then you're not prepared. And then you miss the entry. And then your psychology is affected. So it's all about staying sharp. The market is correcting 80% of the time. And it's easy in that time to take your foot off the gas, take your eye off the ball. And then suddenly that impulsive nature comes in, which we see 20% of the time. Your entry shapes up and then you miss it. But anyway, folks, I hope you've taken some value from this. I'm just going to quickly put my forecast back on the chart because it's disappeared. But have a great day. And I will see you again in the next video. And I will give you my thought process regarding whatever pairs I have on watch. Have a great day, and I'll see you again soon. Thanks for watching.